I'm Dan Fitzpatrick at StockMarketMentor.com, and it's the weekend, August 17th, and I want to look at McDonald's, and I want to look at a couple other food restaurants too, which is typically what is sold in restaurants would be food. But look, McDonald's really has taken it on the chin lately. They announced, I think the CEO said in the conference call that the rest of the year would be challenging. Okay, we don't like to hear CEOs talk about challenging. We like to hear them talk about wonderful and that type of thing, or hitting on all cylinders. Challenging doesn't work. So let's say you want to get in the restaurant industry, though. You want to be long something in this sector. Here's what you got to look at. McDonald's, downtrend. We could say this is a sideways thing here. I could draw all kinds of patterns here. How about this one? There. You name it, we got them. The bottom line is this is the one that really matters, and it's not the obvious thing. I'm not talking about, oh, this trend break here. This is going down to 84. No, the stock's been under distribution for how many days? Like every single day. And volume's been, about average, actually a little less than average. But the stock's just printed this lower high, and that's a problem. Lower high followed by a lower low. Well, here's the rub, the 200-day moving average. This 200-day moving average was pretty relevant back then on the upside. It was actually quite relevant here when the stock rallied up to it and could not get through it. Then it fell back, 50-day moving average, and finally blew through it after what? After a pullback for one day, finally got through. My point is, traders look at the 200-day moving average on McDonald's. But what's really kind of ominous here is the 50-day is trending lower. Give this about, unless the stock takes a dramatic move to the upside, give this another couple weeks, and you'll have the 50-day moving average probably testing the 200-day moving average. But as a trade here at 95 bucks, my bet is the stock's going to hit 97 before it hits 93. Short-term oversold here, you can see stochastics. Okay, but another thing I want to look at here, aside from stochastics, you'll notice the chart got a little different. We're going to look at moving average, convergence, divergence, MACD. And members, I have a long tutorial, it's about half an hour, I think, on how to read MACD, how to incorporate that into your trading. That's in this weekend's weekend update. So take some time and go through that. And by the way, I'm doing more tutorials. This is to you, free chart of the day, guys. If you haven't tried Stock Market Mentor, you're going to see some big changes in the weeks to come, and one of them is more tutorials. So hopefully you'll want to take that free look. Hint. Anyway. So moving average, convergence, divergence. MACD is negative. It's below the zero line. It's also printing lower highs from clear back here. So this is not a stock that we really want to mess around with right now. No, thank you. Now, how about Starbucks, who also happens to make stuff that McDonald's does? Like coffee and espresso and all that stuff. Okay, Starbucks I like better. This isn't a broken stock. This is a stock that's in an uptrend, that's pulled back. Looks like it's finding some pretty good support. And like I'll say here, at 70 bucks, I would say Starbucks is more likely to hit 75 than 65 first. Why? Well, because we see this uptrend. Nice steady uptrend here on the 50-day moving average, lower lows, lower highs. We see here, like on McDonald's, stochastics are getting pretty close to oversold here. Getting pretty close to oversold. And by the way, I'll do a tutorial on stochastics in the next few weeks as well, guys. Anyway, so they're getting close to oversold, looking for a bounce. What about MACD? Okay, MACD, looking a little better. First of all, it's all in the plus column. It's all above the zero line, so it's in a nice uptrend, printing higher lows and higher highs here. So MACD works. And this little signal line, the little crossover here, what this does is just really reflect a sell signal, okay, like we got back here. But the funny thing is, those sell signals are only good for about 2 or 3 days here, because that's what happens with uptrending stocks. With these uptrending stocks, these sell signals are really more like, well, it's probably just going to pull over a bit. Now, here's another one. Chipotle. Chipotle, MACD, really, really nice trend right up above the midline here. And if we zoom to get rid of all that data here, you'll see a better indication here. Very nice upside momentum. High just about where this one was, and a crossover, a sell signal here. Not much of one though. Stock's in a volatility squeeze. My bet is stock gets up to 420 before it gets down to 380. So my point for going through this is pretty simple. If you're looking for food stocks, okay, McDonald's probably going to get a nice little short-term bounce. I can't just think the stock's going to continue to move lower. It broke through the 200-day moving average, but I'll say it again. I look at these zigzags, and you just got to expect some buying. It has a 3.2% dividend. A lot of traders, a lot of investors are going to look at that. So this is one that might work for the short term, but for a longer term investment, I'd look at Starbucks, 1.2%. That's like not that big a deal. The stock moved 0.3% today. So that doesn't really get my attention. And then, of course, Chipotle, big whopping 0 dividend, but the stock's in a really nice configuration too. So you can take either Starbucks or Chipotle, and you're not going to go too far wrong. So, okay, members, over to the strategy session. I've also got a tutorial in addition to MACD on how to sort through the different sectors to find stuff that's outperforming. My bet is you're going to learn a lot, because I'll bet you haven't thought to do it this way.